stocks, bonds, ETFs, straight out of downtown Chicago. This is Zacks Market Edge.
Welcome to Zacks Market Edge, the podcast about investing in your life. I'm your host, Tracy Reineck, and this week I'm going solo to look at Zacks #1 ranked stocks. Those are the strong buys that are near or hitting new 52-week highs. So these are the ones that have a lot of momentum, but the analysts are also looking at the companies and seeing something good. Either it was like a beat or a raise, or they just raised estimates, or the analysts are so bullish they're raising them on their own. One of those scenarios is going on. And because I'm going solo, that means there's no video to this podcast. So you're not missing anything if you're just listening this week. But why should you care about these stocks? Why should you care about the Zacks #1 ranks? And I know there's some of you out there who really do like system tradings, like some kind of system behind why you're buying and selling stocks. And that's kind of what the Zacks rank is all about and what it can provide those of you who want to follow, certain rules on your trading. Not everybody does. I get that. But for those of you who do, who are attracted to, this stock is a #1 strong buy. Oh, that stock is a #5 strong sell. I need to sell that one. I need to buy this other one. That is what the Zacks rank does. And it is a short-term recommendation of just 1 to 3 months. And remember, it changes a lot during earnings season, which we're in right now in August 2023. So you're going to see the companies beat, they're going to raise, the analysts are going to raise estimates, and suddenly that rank is not going to be a #4 or #3 anymore. It's going to jump up to the 2s or the 1s. And so this is the time when you see a lot of the changes with it, but it can also help you find companies that maybe you weren't aware of, that maybe aren't on the news or that nobody's talking about, that did do the beat and the raise, and the analysts are raising those estimates. So it's got the Zacks #1 rank strong buy. And remember, the #1 ranks are somewhat rare. We make it kind of like the old school grading system on the bell curve. So to get an A, there was not many people who got that. And there was also not many people who got Fs on the test, but most people were somewhere in the middle. And that's also true of the rank. There's not that many #1s or #5s, which are the strong sells, but most of the stocks fall somewhere in between. But that's what makes the #1s so unique and more interesting and a better signal for you as a trader, or even long-term investors can use the Zacks rank to find some good stock ideas, because even though it's short-term, something good is usually going on if it's got the #1 rank. And usually that means all the analysts are in agreement somehow, and they're raising those estimates all like together in conjunction. So why should you care about these stocks in particular that are trading near their highs? Well, firstly, they are the winners, right? You're winning if you're near a 52-week high. This isn't the all-time high, although some of these might be near that too, but they've got the 52-week high, which says a lot because last year was not a good year for many stocks. So they've rebounded off of the lows from last year and then some. So these stocks are the winners. And as my colleagues always say, momentum begets momentum. And usually that's when you start to see a lot of, a nice rally with these types of stocks. #2 reason why you should care is what I just explained about the #1 rank, is that they usually almost 100% have rising earnings estimates. That doesn't mean they're actually having earnings growth, but it does mean the analysts see something they like, or, the company gave out better guidance than the consensus. So the analysts have to go in and they're raising their full year earnings estimates. And when all of them do that, that sends a strong signal that, hey, something better than expected is going on at that company. And that's what we want to own. We want to own companies where they are beating the consensus and something good is going on enough where the analysts are raising those earnings estimates, because we're buying the estimates. We're buying, well, not the estimates, but the earnings themselves. And we want those to be on the increase, not the decrease. So Zacks actually is a screen for all of this, and it's in the premium screens on the screening tab. And so it's pretty straightforward. It's Zacks number one stocks, like basically at new 52-week highs. And after I ran the screen, it did give me 49 stocks. That's a pretty good number who are rallying, and that does tell you a lot about the market conditions, and that we've seen this really strong rally in the first half of the year. And so a lot of these stocks are now, again, retaking the highs, from the lows from last year, and they are rebounding really nicely from those lows from last year. So what's actually on this list of 49 stocks? There are a lot of interesting companies. So if you run a screen like this and you're getting these like tremendous momentum plays plus the Zacks number one rank, you can actually kind of see where the strength is in the economy, because these are the companies that are beat and raising, and they're also the ones, breaking out. And so you can see where the hot areas are and where it actually kind of isn't. So just looking at the list, it is a diverse list across all industries, but there's a couple, as you might expect, that are a little bit more represented than others, and some that are barely represented at all, really, like the tech sector. It was not dominated by tech, but you think it would be because those stocks have rallied quite a bit here, but those are not the ones that have the best Zacks rank for the most part. We are seeing a lot of kind of the industrial names, travel, anything related to the home, including the home builders again, of course. And then one secret one that I'm not going to discuss because I was surprised to see it on the list. So as I said, every area mostly was represented here in the 49 stocks that the screen gave. So nothing is left out, which is also interesting, right? So what is on here? I picked out 5 stocks. Most of them are names for the most part, except the secret one. And it's interesting that they're on this list because going into this year, you might not have thought some of these would be on this kind of list in August 2023. So we're going to start off with one of the Magnificent Seven. It was the only one that made this list, and it is Amazon, ticker AMZN, of course. I own it in my own personal portfolio. I know many of you do too. So this is not a secret one, and it has had the big rally, up 65.9% year to date. So it is trading near that 52-week high again. But over the last 2 years, it's still down 16.7%. So it hasn't wiped out all of 2022's declines, not quite yet. But what's earnings supposed to do? This is where the powerful part is. So earnings expected to be up this year 164.8%. to $1.88 from 71 cents last year. 6 estimates are higher after coming off this earnings report, and that's where you're getting the Zacks number one rank. The estimates are on the rise, and that's a pretty impressive number. But remember, last year they were pretty bloated with the higher employee count. They were just starting to do some cost cutting, but now that has accelerated. That cost cutting has helped with the earnings actually quite a bit. So as you can see, expected to be up 164.8%. So earnings do matter, and the street is responding to this, upward revisions on the earnings estimates for Amazon. So it's got that Zacks number one rank, strong buy. Okay, the second stock was a surprise to me because usually this is on the value lists and the kind of down on its luck lists, and it's General Electric, ticker GE, of course. year to date, these shares are up 74.6%. So what a rally. I haven't looked in a while, I have to say. And so again, I was surprised by this. So they're outpacing even Amazon this year. But what do those earnings look like? So they are on the move higher. 8 have been raised in the last 30 days. So off that earnings report was better than expected. Analysts a little too pessimistic. So the Zacks consensus has jumped up to 227 from 202 just 30 days ago. But that's still a decline of 13.4% from last year when it made $2.62. So again, this is a reminder, the screen is only looking for the Zacks number one ranks. It's not looking for actual earnings growth necessarily year over year. It's just looking for the estimate revisions to be revised higher. And so the estimate is on the rise, not necessarily the earnings growth. But the street likes what it sees, obviously, and it's trading near that 52-week high. And so GE has the Zacks number one rank, strong buy as well. Then we're going to switch to travel. And the third stock is Marriott International, ticker MAR. What does this one look like? So year to date, it's now up 37.7%. Earnings expected to be up on this one, 28.7% off last year. So we're looking at 861 versus 669 last year. No one is really surprised by this, right? After hearing what the airlines are saying, some of the cruise lines, and now all the hotel chains are saying they are really seeing strong demand still. And for some of these big name hotel chains like the Marriotts, the Hiltons, the Hyatts, they are seeing a return, even though it's somewhat slow, but still a return of the business traveler as well. So that's helping a bit, but it's still being driven a lot by the weekend travelers, the leisure, and especially internationally. Obviously, Marriott International does have a lot of international exposure and international hotels, so they are benefiting from the surge over to Europe that's happened this summer. But these chains all see strong demand even heading into fall. So that's Marriott International, ticker MAR, with the Zacks number one rank. Then number 4 is the surprise, the secret one. I was surprised to see it on the list, and I was like, how could this be? It is a bank or a bank holding company. The name is OFG Bank Corp, ticker O as in Oliver, F as in Frank, G as in George, OFG. And they are the holding company for Oriental Bank, which is in Puerto Rico and U.S. Virgin Islands. So OFG Bank Corp, they might have some U.S. locations too, like on the mainland, but they're a big bank in Puerto Rico. Puerto Rico has had a nice boost, again, thanks to travel, people returning to travel. They're going back to Puerto Rico. Things have turned around there after the hurricane issues that they've had. So this bank is actually looking pretty good here on a rank basis. So earnings expected to be up 8.7% this year in 2023. The estimate's now at 374 versus 344 last year. And year to date, these shares are trading now near that 52-week high. That is maybe the most surprising thing of all, that we could actually have the bank. They've rallied definitely off those lows from the banking crisis in the spring, but I haven't seen too many of them that have retaken like a high. But OFG is one of the rare ones that has it. I'm taking a look here at it. It's paying a dividend yielding 2.6% as well. And I'm just kind of looking to see, we have one estimate. So there's not that many analysts on this bank, as you might imagine, being that it's, in Puerto Rico and the Virgin Islands, and it's a bit smaller. It's not Wells Fargo or something like that. So we have one estimate on this bank, but that analyst did raise within the last 30 days. So it's gone from 347 up to 374 during that time. So obviously, the last earnings report was enough to say, hey, we're underestimating what this bank is currently doing, so we need to raise here. And they did. But that's what the Zacks rank is designed to do. It's designed to find these stories where the company is doing better than, the market assumes and the analysts. And so the analysts are raising those estimates and we're getting the better rank. So that's an interesting story. OFG Bank Corp won on the list of the Zacks #1 rank, and it is a bank, ticker OFG. And then we're going to wrap it up on the housing side, but I didn't want to do a home builder because that's been done a ton. And I'm going to stick with TREX, ticker T as in Tom, R as in Robert, E as in Edward, X as in X-ray, TREX. Many of you know it because it's the decking company. It's the composite decks. I think they also make they do fencing and some other stuff. Railings, that's what it is, railings and the decks. But TREX had a difficult year last year. They had too much inventory for when demand slowed. So they had to cut production in at least one of their plants. And then they had to wait for the inventory to basically be absorbed from the retailers, from the wholesale side. And so earnings did, see softening here, a decline. But what's happening now? So in 2022, 6 estimates are higher after this last earnings report because I did tune in to kind of check and see what was going on with TREX because it's an interesting company. And it was a solid quarter, much better than expected. The analysts were much more gloomy going into this number, and they are not. They are seeing demand starting to return, but the inventory has righted itself, and that's what you need. So 6 or higher for both this year, 2023 and 2024. We're expecting earnings of $1.76, but that's still a decline, but only of 2.2% now from last year, which was at $1.80. So not that big of a deal considering what's happened with the consumer and the housing market last year when it froze up, and all these things are interrelated. But housing market is coming back to life. So that helps TREX because when you move, you might be willing to put on the new deck onto the house, right? Year to date, these shares are up 73.6%. So a real wild rally. They are now, again, back at 52-week highs. This isn't a cheap stock, though. I kind of been hoping I could get TREX a little bit cheaper. Even in the sell-off last year, it never got like dirt cheap on a PE basis. And now it's back to trading at 42 times. But the street real bullish on anything to do with housing right now. I'm waiting a little bit more for the furniture retailers, maybe to even rally a little bit more than what those are. But right now, home builders and anything on the building side, including decks, apparently are doing quite well here in 2023. So that's TREX, TREX, with the Zacks #1 rank as well. So you can see these are kind of interesting 5 stocks, right? Some are what you might assume, like the Amazon, but others are not. And something good is going on if that Zacks rank is being raised. And with these, for the most part, other than OFG, which only has the 1 estimate, these are like multiple estimates being raised at the same time because on this earnings season, everybody was pretty pessimistic going into it, and it hasn't really turned out to be as dark as some had thought it was going to be. So that's good news. But definitely check out the list of Zacks #1 ranks, especially if you're a premium member on Zacks, or I will continue to keep bringing them to you on various podcasts as well, of course. But you can get some of the Zacks ranks for free as well. Just go to Zacks.com. The bull of the day is usually almost exclusively a #1 rank stock. So 5 days a week, you can get a nice write-up on a #1 rank stock and what's going on with it right there on Zacks.com. But as always, I'm bringing them to you every week here as well on the podcast, or trying to. And this is interesting. It's always interesting to tune in after we've had a big rally and we had some low expectations going into the earnings season, which did not turn out to be the case. So let me repeat the stock tickers again. We had Amazon, ticker AMZN. I own it in my own personal portfolio. We have General Electric, GE, back on the scene with the number one rank and a big rally here in 2023. We had Marriott International, travel stocks back in front again too. MAR is the ticker. We had a bank, OFG Bank Corp. Didn't see that one coming, ticker OFG. And then we had the deck composite guys, TREX, ticker TREX. And as always, be sure to get us somewhere we are. We're on Apple, we're on Spotify, we're on Amazon Music. And when I do the video podcasting, you can get those on our YouTube channel on Zacks Investment Research on YouTube, or just go to zacks.com/YouTube to get all of our videos, including you can get the top stock picks of the week video there every week as well. Those will give you some Zacks number ones as well. So if you're looking for those Zacks number ones, but you don't want to be a premium member, you can get them, but be sure to get them at these places that I mentioned. But otherwise, be sure to join us next week, because I'm sure I'll have some good top stock picks for next week as well. But be sure to join us then, and I'll see you again next time.
This material is being provided for informational purposes only, and nothing herein constitutes investment, legal, accounting, or tax advice, or a recommendation to buy, sell, or hold a security. Do not act or rely upon the information and advice given in this podcast without seeking the services of competent and professional legal, tax, or accounting counsel. Publication and distribution of this podcast is not intended to create, and the information contained herein does not constitute an attorney-client relationship. No recommendation or advice is being given as to whether any investment or strategy is suitable for a particular investor. It should not be assumed that any investments in securities, companies, sectors, or markets identified and described were or will be profitable. All information is current as of the date herein and is subject to change without notice. Any views or opinions expressed may not reflect those of Zacks Investment Research as a whole.